Hello, this is Ilya Colby from the Colby Real Estate team at William Ravis, and today I'm here with Bob Flynn, who is our mortgage loan officer at William Ravis. Hello, Bob. How are you today?
Good morning, Ilya, and thank you for having me.
Thank you, Bob. So, just wanted to ask you to introduce yourself and how long you've been in the business, and what is your role at William Ravis Mortgage?
Well, thank you, Ilya. To give my background, I actually got into the business fresh out of college back in the early 80s. I had an economics professor that was talking about interest rates being in the 20s, believe it or not, fixed rate interest rates in the 20s. And
Wow.
yeah, he explained to me that they would only be coming down, and I'd be able to get into a financing position to help buyers save money and to make a living.
Thank you, Bob. Thank you. So, the number one questions I'm getting today, because there's a lot of news out there on internet, TV, newspaper, and everybody's talking about interest rate. And the reason they're talking because the Fed came out and they announced that they're going to increase the short-term interest rate 3 times this year. So I think they increased once. So there are 2 more times, correct?
Well, that's not correct, Ilya. They are planning on it, but they're waiting for the next FOMC meeting before they do the first increase. What people don't understand is that the Feds don't control mortgage rates. So the Fed controls something called the Fed fund rate. It's what they actually lend to banks. Banks control prime rate. So as soon as the Feds raise the rates, short-term interest rates will go up. The banks immediately will follow with an increase in prime rate. But that only affects car loans and personal loans and credit card rates and things like that. Mortgage rates are controlled within the bond markets. And we can have changes, multiple times during a day within the bond markets. We're seeing rates move higher in the bond markets based on economic data. Yes, the words of the Fed created a higher movement in the markets, but they don't directly control it.
Oh, I see. That's why, we have you here just to give us all this valuable information. Bob, I just wanted to ask you about your experience working with buyers, and what are some of the programs or differences. I'm doing an open house, buyers coming. Some buyers may have no pre-approval at all. They will say that, I have a good credit and I can get a loan. Some other buyers, they have a pre-qualification, and some other buyers, they have a pre-approval. Can you touch base on this? What's the differences between a pre-qualification and pre-approval, and what's out there, what William Ravis can offer different to a buyer to compete in this multiple offer situation that we are having, and have that buyer win just based on the pre-approval that they got from William Ravis. And we have done it multiple times together.
Yes, we have. We've won a lot of bids by working together. So just to differentiate between the different types of pre-approvals or pre-quals out there, after the housing crisis, Ilya, the government decided they were going to put rules and regulations on what became a mortgage application. And the banks decided that they did not want to work on loans that wouldn't come to fruition, and they limited themselves to pre-qualification. And basically, they're running somebody's credit and sending them out with a letter that's not worth the paper it's written on. A pre-approval is a step above. It's somebody who has a credit pulled, and they also run through something called automated underwriting. So Fannie Mae and Freddie Mac have their engines that allows us to input data. We are a direct Fannie Mae and Freddie Mac lender, and that will tell us the client's approved and allows for certain conditions. But the problem with those 2 types of the pre-qual, again, not worth it, the pre-approval better, is that sometimes clients put things into their application that aren't true, right? They may think that they're getting an inheritance in 6 months, or going to liquidate a stock that bottoms out, or their income. You know, everyone's paid differently. Somebody who's self-employed might put in their gross income only to realize we only can use their net, and they wrote everything off, so they pay less taxes. We, with doing a certified pre-approval with William Raveis, is a pre-approval on steroids. So we're getting all the documentation, we're running their credit, and we're running them through automated underwriting so that when we take a file, we know we're pulling into the train station on time and closing.
Yeah, that's really a great asset that we have at William Raveis. And I've experienced it multiple times when I present an offer to a seller and I have that certified pre-approval from William Raveis Mortgage and from Bob. That's a huge benefit for the buyer for 2 reasons. Because first of all, that buyer is stronger financially among other buyers that are competing with the property. And second, Bob is one phone call away, and many times Bob will follow up with that offer. They'll call the other agent on the other side and reassure that agent that Bob has qualified this buyer and pre-approved based on assets and based all the documentation. So this is not just a pre-approval over the phone without meeting the buyer, without qualifying. So we have really experienced that, and thank you, Bob, for being there for us, you know.
You're welcome.
Times. So, you know, we've been talking about buyers. So mortgage, when we talk about mortgage company, we always think about a buyer related to a mortgage company.
Correct.
But how about the seller? How the seller can benefit from our services or from a loan officer, you know, or a mortgage company? How the seller can benefit in this market?
That's a great question. So on the seller side is, you know, sellers have difficulty right now with the lack of inventory because they really have nowhere to go, right? Supposedly. Right. So with Raveis, and a lot of the times we have sellers that have all their equity tied up in their property and aren't able to bridge the gap between selling and buying a new home, because normally you need a 5% down payment on the new home, or you need to be able to qualify carrying both properties. So until you sell your trailing home, you can't qualify for the new home. And, you know, face it, in this market, nobody takes an offer with subject to you selling your home. So Raveis has some unique programs. You know, we have a cash buy program where we will turn around and buy that seller's home and give them 80% of their equity and eliminate their trailing mortgage payment so they can go ahead and buy their new home. Coupled with that, if somebody has a home that maybe they haven't kept up and want to take advantage of the maximum that they can get for that market, we will actually lend the money, do the work, and bring that property up to value, and they reap the benefits of any excess equity that they do by making that home better.
So you're giving that seller the benefit to become a cash buyer on the market, correct?
That is correct. So on the back side, they get cash buyer. On the front side, they can list their home, or if it doesn't sell by the time they want to close on their new home, we'll buy it from them. And
that's huge, yeah.
Then we'll give them the remainder of their equity once they do sell their home, so they do get that back eventually. And you know, the third part of it is they decide to take advantage of our program that allows them to fix up their home using our cash. They reap the benefits of that.
And I believe we also have that for the buyer. So the buyer, through that pre-approval process or certified pre-approval, it comes to that level that you can create as a cash buyer.
That's correct. So you know, we're seeing a lot of sellers that you will take a cash buyer before anything else, right? Because they think cash is king. One of the things I have to do touch base on is, you know, cash does not always perform. You know, my certified pre-approval will perform more than cash. They may think that, the stock market, it's going to hit a little more, and now they make an offer for cash only to find out that the market, as we've seen, corrected 10, 20%. They don't have the cash, and now they can't perform. They walk away from the 5%. And trust me, the seller doesn't want to keep their money. They want to sell their home. A certified pre-approval will perform more, but we can also turn that buyer into a cash buyer. If a seller wants a cash buyer, we can turn around and buy that property for that client as a cash buyer with a letter of credit, and then turn around and sell it back to our buyer post-closing. So they can perform. They can come to the closing table with funds, with cash funds, and actually close on that transaction.
That's great. Yeah. So if you are a seller or a buyer, you can benefit both ways. You can become a seller, can become a cash buyer on their next property, as well as a buyer can become again a cash buyer in a situation of multiple offers, and he can be chosen by the seller because of that only.
That is correct, Ilya. And the bottom line is we have a plethora of programs to help not only the buyers but the sellers to bridge all the transactions necessary to get their home sold and find them the new one.
Oh, really great. Thank you, Bob. This was a lot of information. Probably, a buyer or the seller has to watch it maybe multiple times.
Or just simply give us a call, right, Ilya?
Share a lot of information. But hey, if you have any other questions, you can reach directly to us. You can call me, message me. You also can call Bob or message him. I'll share his information as well. So if they want to reach you, Bob, how they can reach out to you? They can call me, and at the same time
They certainly can, Ilya. We're available 24/7. Our William Ravis, Ravis.com website has a fantastic information, including mortgage there, where you can find all my contact information right on that website.
Thank you, and thank you. And if you see value in this video, you can share this video with your friends or relatives and make a comment. What do you think about the interest rate this year? Are they going to reach at 4%, or are they going to go higher?
They're there now, Ilya. The 4% is actually the new norm.
The new norm, right?
The thing is that people that want to wait to buy and they think they need to save 1% more or 2% more to maybe avoid PMI or to just try to keep their payments down. Money's cheap still, even in the 4%. So the cost per thousand is $4.75. A year ago, 2 months ago, it was 4%. So anyone that is waiting only to lose out because values are going to keep increasing nominally 3% and the rates go up, they've already lost hundreds of $1,000s in buying power. Don't wait. Buy now.
Yeah, if you are a buyer or a seller, now is the time.
Yeah.
Thank you.
You're welcome. Thank you, Ilya.